Welcome back, folks. Taking a look at gold, and I want to talk through my current short position that I've just taken. And it's a very common setup, and it's all about the setups. As you learn more about price action, you'll pick up on these things that just repeat. Okay, so this morning in Asia, we've taken out previous daily high. Okay, now I'm always looking at the market and how it behaves when a previous significant high, such as a daily high or a weekly high, has been taken. That's kind of when I am more interested in the market, because that's where the higher probability trade setups will occur at the low of day, high of day, low of the week, high of the week. Okay, so this is not just the high of the previous day, but that's also the high of the week. Okay, so Wednesday we've opened up and taken out the high of the previous day, which is also the high of the current week. Okay, even though this is a shallow run up above that, that does trigger breakout traders. So notice how every time higher time frame traders are triggered into the market, it's a way of the market makers to trap longs up high. Okay, so when I see that the market is taking out the high on the left, high of the day, high of the week, and then immediately rejects, I'm looking to short that market. Okay, because I know that they're going to want to go back at least to where the breakout traders have got in. Okay, from this pullback through the high of the previous sessions, right? This is the high of the New York session. This is the high of the London session. Okay, and at that point, okay, when the markets pull back down here in the lunchtime session, there's still liquidity residing here, as well as previous daily highs and current weekly highs. Okay, so I like to see this rejection. Okay, where the market takes out a daily high or a weekly high, comes back inside the range, pushes back up for this continuation short. At a minimum, it's going to come back down into any one of these breakout traders from previous session. Right, the previous session breakout traders, right? It's going to come back to there at a minimum. But then you've got to kind of look at other levels. So for me, the level that I'm interested in is where is there some inefficiency, because I've spoken about this previously. If you look at what has the market done and ask yourself, where's it going? Okay, we can see on this 480 chart, we've taken liquidity. Okay, so we've taken liquidity. So what have I said it needs to do? It needs to seek the same in the opposing end. So in the opposing end, it needs to seek liquidity and or inefficiency, and that inefficiency is this 4 hourly fair value gap. Okay, so we've got order blocks here, 4 hourly order blocks. Okay, this is the 4 hourly order block. This is the 4 hourly order blocks taking liquidity. Okay, so this has been the dump for the pump. So this is where the market is expected to come into. Okay, so my short position, I've got a short on at the moment, and I'm looking for a movement back inside of this fair value gap. Okay, and I will close that out and journal it once I do close that trade out. Okay, so that's the premise for the trade. Very common setup, and that's what you've got to do. You've got to identify your setups and then look for them in real time. So for me, this is a very common, very repeating setup. Half the day, half the week, taken immediate rejection after having this pump. Okay, so this is the pump for the dump. Okay, so I just wanted to record my entry. So let me talk a bit about the entry. So here you can see that as the market's gone up, taking liquidity, immediately come back down and engulf. This is therefore your bearish order block. This down candle is our bearish breaker. Okay, so we've closed below or even traded below those levels. Okay, and I've taken my entry on this. So Asia opens up at 8 p.m. and this push up into the bearish order block, as well as just touching the bearish breaker, is where I've taken my short from at 2525. Okay, so it's around in there. Okay, 2525 is the entry price. Might actually mark that so I can see that. Okay, so the entry is 252504. Okay, there we go. And now it's 9:30, so 9:30 might push up into this fair value gap, and that would be the institutional order flow entry drill. Okay, where the institutions will want to get in just above that high, anywhere above that high, basically anywhere into the fair value gap. Might even pump up all the way up to this rejection block. Okay, which is where I've entered based on this pump up into this bearish order block and bearish breaker. Okay, so I'm looking to hold this probably down to here into the fair value gap here. That is also where is the discount PDRA on the 4 hourly chart into that fair value gap. Okay, so that's kind of where I'm looking to take off my current short position, and it's a 5 lot, and that'll net around that 100 pips. So a nice move down. Okay, so I hope this video is useful, and I will now talk with you in a future video.